What's up, Tesla family? It's Ray J back with another video. And in this one, I want to break down what's happening with the overall market moving forward. I'm going to give you guys some price predictions for Tesla, SPY, Nvda, NQ, the QQQ, and many tickers out there. I'm going to talk about some big news involving the Fed that's coming out. Not to mention the news about the markets, that's also very important. But let me just mention that I am not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please smash the like button. It not only benefits me, it benefits the entire Tesla community as a whole. Anyways, the question is what's happening with the markets. As you guys know, the market saw a bit of a dip as we saw some bad news that came out. What happened was in Japan, interest rates had to go up because inflation was hotter than expected. And as a result, it led to a lot of fears over there. We saw the Japanese stock market take a big hit that affected the US markets. And there's also a lot of fear about the US economy. Remember, going into last week, we saw a lot of negative data. We got some weak unemployment numbers, we got some weak manufacturing numbers, and the market took a big hit on Thursday and Friday. Going into today with all this bad news that's been coming out, the market was starting off on a very, very weak end and it started to consolidate, kind of struggling to break through some resistance. But now during the after hours, the market's trying to break out, try to push through resistance because we have some new news that's coming out. So Warden's Jeremy Siegel has come out and he's saying that the Fed needs to make an emergency rate cut. And this is becoming the new main piece of news that's helping the market start to push. So what's going on with this? Basically, Jeremy Siegel, who's a professor at the University of Pennsylvania. He also works at the Wharton School. This is very important because he's come out and he's saying that the Fed once again went too far with their rate hikes, and the actual calculations show that the interest rates should be a lot lower than where they currently are. So he said that basically another 75 basis point cut indicated for the next month at the September meeting. That's the minimal in his personal opinion. This is what has been calculated. He's saying that the Fed's fund rate should be around between 3.5 and 4%. That's significantly lower than where we currently are. They're saying this amidst the fact that the jobs report is still showing weakness, not to mention the recessionary indicators are going off, and there's more pain to come. One thing that's very important to note that Jeremy was implying is that it's kind of like the same thing I've been telling everyone here, and that is the Fed's policies have a lag effect. So whatever the Fed did many months ago is starting to affect us now. So if they start cutting rates, there's not going to be an immediate effect. It may affect the markets immediately, but it's not going to actually affect the economy for quite some time. You're going to really see the effects over time. That's why he's saying it's smarter for the Fed to just start these emergency cuts as soon as possible. So that's becoming the new norm right now. Now everyone is saying the Fed has to cut. There's going to be an emergency cut coming. And looking at our data, the current Fed Watch tool is showing us that by the September meeting, the market's expecting at least two rate cuts. We're expecting them to do two cuts by the September meeting, if not as soon as next week for an emergency meeting. So this is very, very important. Why? Because if the Fed does not act quickly, things could start breaking even faster than expected. That the economy is starting to take a hit right now. You can see that in the unemployment numbers. You're starting to see that in other metrics, and the economy is still going to be hit even if they do one cut, right? It's just not going to be hit as hard. That's the most important thing you have to remember, because the Fed should react quickly. The problem that I would say is kind of like affecting the Fed and gets them a lot of criticism is the fact that Jerome Powell is always saying we're going to react to the data. We're going to wait and see what the data tells us. The data that you're looking at, CPI, PCE, it's all delayed data, right? August 14th, I believe, is when we have CPI. That is going to be for the month of July, and that's late data. That's why it doesn't make a whole lot of sense for them to be waiting too much. I think the Fed has to take action very, very quickly. So that's why the market is trying to rally. It's trying to push now. The market may try to push a bit so long as the Fed does not kind of like invalidate this news. So the market's trying to recover. If the Fed comes out and says, actually, we're not going to do a rate cut, we're not going to do an emergency meeting, the market's going to take a big hit and see a rug pull. If there's no news that comes out about that, if the Fed does not say anything thus far, the market will continue to rally. If the Fed confirms there's going to be an emergency meeting, yes, the market will rally. So the market is trying to rebound amidst this news that the Fed is going to cut. Now, there's also more news coming out involving the Middle East. Right now, Biden and Vice President Harris are holding security talks about the tensions that are going on. And this is very important. So if we get some kind of reaction by tomorrow, let's just hope that it's not negative for the markets. As long as it's not negative, the market should react. more positively. So we'll have to wait and see what we end up getting. As of right now, it's just all talk and threats are going out, but I haven't really seen confirmation of an attack or anything like that thus far. For news about the markets, the economic calendar doesn't really have too much coming out tomorrow, just exports and imports data. At 10:10 a.m., we have the economic optimism report, very minor data. Don't worry too much about this, guys. There's not much data coming out for tomorrow. The main thing affecting the markets now is the Fed. I want to make that as clear as possible. For other pieces of news, we had Palantir announce their earnings. They did relatively well. And then Berkshire Hathaway also talks about some important things. Don't forget they're holding more cash than ever before, and they reduced a large percentage of their stakes, especially in stocks like Apple. So that's very important. That's why we saw the market dip as well. Berkshire Hathaway played somewhat of a role, but then Palantir is now announcing earnings and things are looking pretty good. They had good earnings overall, and they're raising their overall forecasts for the year and also for the upcoming quarter. So looking at this, the annual revenue is expected to be around 2.74 billion. It's about 2.75 billion above expectations. That's the forecast for the year. And then they're also mentioning that right over here that their forecast for the third quarter revenue is about 697 million. It's about 701 million. That's above expectations as well. That is bullish for them. That's why the share price is up right now. So good for Palantir. That's why the share price is trying to push. For Tesla, we had about 100 million in volume. So volume is still decent. It's starting to go up again. And then the short volume is starting to decrease a little bit. Cantor Fitzgerald gave Tesla a neutral rating, but they do have to note that they have a $248 price target for Tesla. And then the price price ratio is dipping, showing that Tesla's underperforming. And that is once again creating another buying opportunity. Not saying it's the final bottom, but it's just something I want to know. It's not financial advice as well. That's pretty much it, guys. The news is not that big for Tesla as of this week. I haven't really seen anything too crazy. And right now, the main thing affecting us is going to be what's happening with the Fed and also the markets. So let's go over the chart. It's very simple, guys. We're most likely going to come to fill this gap and go up to 208 by tomorrow, if not higher. If that breaks, 212 is coming, and then eventually 216. But at least we'll be looking at 208 at the very least. That's close to our 50 EMA. That's most likely what we're going to see for tomorrow. If we're bearish, however, okay, if we're bearish, let's just say the Fed comes out and they hypothetically say, oh, we're not going to do a cut, then we could be looking for a rug pull. We'll be looking at 196 as supports, 195 to 196. If we lose that, we'll be dipping all the way down to, I would say, the lower 190s. Okay, so make sure you watch that support just to be safe. What is most likely happening? The chart looks more bullish. It looks like Tesla's trying to push on the hourly time frame. So it suggests that upside is looking more imminent. Looking at the 4-hour, we're also turning. We're trying to fill this gap. If we break, the 4-hour is also showing us that if we fill this gap, we could actually keep going for that 214 target all the way up towards our 200 EMA. So the chart is looking more bullish from a technical standpoint. We favor the upside. Can I promise that? It depends on the Fed, of course. We'll see what the Fed announces, anything or not. If the Fed says nothing, the market's going to push. If the Fed says there's no meeting coming, that's going to be bearish. And if the Fed says there is one, that would be bullish, right? The market's betting on an emergency cut. Any news in support of that is bullish. If not, it's bearish. So far things are favoring the bullish side. The market expects some kind of rate cut that's coming very soon, an emergency one, and there's nothing that's stopping the market from thinking that. That's why we look more bullish. We'll see how the news in the Middle East affects us, but as of right now, the charts favor a bounce, so that's looking more imminent in my personal opinion. For SPY is looking more bullish on the 4 hours, also kind of churning, but we have to watch for confirmation. On the hourly time frame, it's very simple. We're testing our 20 EMA. We have a cup and handle like structure. If we manage to break and hold above 522, I think we could fill this gap. We're going to be testing 525 first. That's where this resistance is. And then if that breaks, we'll fill this gap all the way up to about 531. If we're bearish, if we take a big hit, make sure you watch 515. If that fails, this will be dipping all the way down to about 512. In my personal opinion, the chart's favoring a cup and handle, and we're favoring basically 525, and eventually the gap fill all the way up to the 530s. SPY looks more bullish from a technical standpoint, but we'll see what the Fed says. It depends on them. If they don't say anything, we're going to likely continue to push, and that looks more favorable for tomorrow. The upside looks imminent, so long as we don't get any negative news. ES looks more bullish, got a nice inverse head and shoulders like structure, and we were struggling to break above our 20 EMA throughout the day, but we finally broke it during, I would say during the after hours period for the normal market. Obviously, ES is still trading, but I'm just saying that like during that period. So this means that if we manage to get above 5280, we're easily going up to 5300. If we were to hypothetically lose 50 to 25, we'll be dipping back down to these lows. With inverse head and shoulders forming, this is favoring upside. This looks more imminent. So 5300 looks more like it's a very probable target in my personal opinion. For SPX, we're favoring the upside. We want to see this thing break past 2550. If we break that, we're going to be looking for a push all the way up to about the 5300s. If we lose support at 5160, we'll be dipping back down towards the 5100s. This is favoring upside a little bit more, just a little bit more if we're establishing a higher low. So that is looking like it might try to bounce. Nvidia is also trying to rebound. Now, if we were to turn bearish, because we didn't get this break until during the after hours, see how tricky this was? We were struggling during the open hours, and once the market closes, then they start pushing it. So they're very, very tricky, very cunning price action. If we hypothetically get bad news and we lose 100, look at 97.5. If that breaks, we're turning bearish. If we're bullish, you want to be looking for the gap fill. I think that 105 is our first target and 107. The chart is looking more bullish on the 1 hour time frame, so I favor that in my personal opinion. For Bitcoin, we're looking more bullish. If we try to hold above our 54,000 area, that's going to be our 20 EMA. The chart is favoring the 56,000 zone. If we end up losing support at 53,500, we could be dipping back down. But looking at the technicals, this is favoring a nice double bottom, and it looks like Bitcoin might try to push a little higher. As long as we hold above 54,000, I think we could. So we'll see if it holds, but this does have potential to be forming a wedge. For NQ, we look more bullish, but we need to try to hold above 18,250. If we hold above that, I'd be looking for 18,320 as the next resistance. Breakdown, and this thing's going to be flying to about the 18,500s at least, if not higher. We have a nice double bottom. It favors upside. If we lose 18,000, we turn back down, but this chart's favoring the upside. We'll see what the Fed says. We'll see what the news tells us about the Middle East tomorrow. Let me just make it clear that that's going to affect us too, but so far things are favoring the upside. QQQ is also favoring upside. If we break resistance at 442, I'd basically be looking for this gap fill towards 447. If we reject and we don't hold above support at 439, watch 433. If that breaks, we turn bearish. So right now the chart's starting to favor upside a little bit more, but just to be safe, we have to wait and see. And then also we have to wait and see what happens with the Fed and all these different factors, but the chart still favors upside. Apple's also favoring upside. If we manage to hold above 210, I think I'll be looking for 214, then eventually this gap fill towards 220. If we lose to 205, we turn back down. And as of right now, we are favoring upside, so we'll see how things go. So far, so good from Apple, so things are looking pretty good in my opinion. Let's go over just a few more. I'm going to go over the rest of these, but I'm going to be kind of brief now. So for Palantir, we're looking bullish after earnings. Make sure you watch 26.44 supports. Might retrace towards that, then try to bounce, but it's looking more bullish overall. Let's see if the Fed announces anything that affects this, but so far it's favoring the upside. Supermicro is favoring the upside. Got a nice looking divergence here. We got the gap fill, so all that's left is that 630 area. I think we might test that. If that breaks, we're going all the way up towards much higher levels, such as the 645. If we end up losing 609, we'll be dipping all the way down to 580. This chart is favoring a test of 631, then eventually a break higher. We'll see if that ends up being the case as long as there's no bad news. We have a nice inverse head and shoulders like structure on Rivian. As long as we hold 14.94, we favor a move all the way up towards the 15.5 area. If we lose 14.64, we'll be dipping all the way down towards 14.25. With the inverse head and shoulders forming, we favor upside, so I do favor that. I think there's a good chance we end up seeing like 15.5. So Rivian is looking pretty good in my personal opinion. For SoFi, we have a nice kind of like inverse head and shoulders like structure. If we break 6.79, we'll be looking for a push all the way up towards 7.12. And we end up losing this support right here around 6.5. We'll be dipping all the way down to this imbalance towards 6.3. With this inverse head and shoulders, we'll be looking for a nice push. I think that 6.8 is looking more probable, and I favor a little bit of a push. I think this is going to try to push higher, especially because of the anticipation of the Fed potentially cutting. That's very good for the finance sector. That's a good piece of news for stocks like SoFi. For the IWM, the Russell, it looks bullish. It looks like it wants to bounce and fill this gap all the way up to about 207. It's also above our 20 EMA, so that's a good sign. It might even try to go higher than that towards like the 210, 212 area. So it looks bullish. If we turn bearish and there's bad news, watch 200. If we lose that, we turn back down. But this chart is favoring this gap fill all the way up to 207. For AMD, there's an inverse head and shoulders. As long as there's no bad news, I think we could be pushing for a higher level. Watch 138 to 140's resistance. If that breaks, we're going up to about 142.5. If we end up losing 134, we're going to turn back down, but this chart's favoring upside a bit more as we're holding above our EMAs. So we look pretty good on AMD. This is favoring upside. Not bad whatsoever. ARM, If we manage to break 116, I'll be looking for a push all the way up towards 120. If we lose 110, I'll be looking for a dip. We're kind of in the middle right now, but I could see a little bit of an attempt to push all the way back up towards 116. So we'll see if that ends up being the case. So far, it's holding up well. Coinbase is trying to rebound. We're actually just barely at resistance. We got to break 193 to turn back up. If that breaks, I think we fill the gap to 202. If we fail to break and hold above that resistance, then I think we could reject. And I'd be looking for a move back down to 185. So there's some potential in Coinbase, but we got to break this resistance. We haven't been able to do so far. We're just kind of tight right now. So we got to give this more time just to see, but there is potential in it. Amazon is testing 162.5 as resistance. If that breaks, we have this gap to fill towards 168. If you reject, we'll be dipping back down towards 158. But this chart's favoring upside, so we'll see how things go. For Meta, we're looking pretty good. We got a bullish wedge that's forming. I was calling out the strength I saw building during my intraday video updates. I think we might fill the gap towards 486. And if that breaks, we're going back up to the 490s. If we turn bearish, hypothetically, you want to see us lose 477, then we'll dip. But this is favoring the upside very greatly. So I favor upside. I think there's a good chance we're going to push. So we'll see if that ends up being the case or not. And then it also depends on other factors such as the Middle East and such. So we'll see, but we still look more bullish. Microsoft has a nice setup, very identical to Meta. I see as long as we hold above 400, this gap is going to fill. I think 407 is coming. If we were to lose 400, look at 395 as our last support. If that breaks, we turn bearish, but this is favoring the upside. For Google, we're not looking that good on Google. I want to see this break this imbalance. I want to see it break 165 to turn back up, and then we have that gap to fill to like 168. Not looking that great. We're still struggling to break our 20 EMA. It might attempt to do so. We got to get back above 163 to turn back up. It's struggling so far, but I'm rooting for it. If anything, I hope it tries to break this, but hasn't been able to do so far. So it's a little bit lackluster. Look at support at 160. If that fails, we'll be dipping back down towards 158. This chart is favoring the upside. We'll see how the news affects us. And we have to try to break resistance to do so. But like I said before, let me just repeat that. Google's still kind of weak. It does favor upside a little bit more, but it's still weak compared to other stocks out there. For GameStop, if we manage to break past 21, we're going all the way up to 22.5. I do see potential upside in GameStop. Same thing in AMC. I think we could be testing 5.09, if not higher levels. So I see upside in that as well. For DJT, I mean, we dipped really hard only to rebound a bit. I think we could be testing 27.62. If that breaks, we'll push higher. We'll see if that ends up being the case. So I see the potential. So we'll see if that happens. The VIX is also on a nice rebound. One thing worth mentioning is that the VIX does like to reject. It likes to kind of like pump and dump. So we'll see if the VIX gets a rejection again, if the market does push a little higher. The 10-year, this is dipping really hard. It's crashing right now because the market thinks the Fed is going to turn more dovish. The market thinks the Fed is going to cut. That's why it's pricing in a cut right now. So that's why the yields are dropping. That's why there's a big shift right here. This means that the dollar is not only following this trend, but it's shifting a lot because of the Japanese situation, because of how the yen is shifting because of interest rates. So, with the dollar dipping, it's not really affecting the markets as much like it typically does. We'll see how it goes, but it's still once again going to likely dip more. So that doesn't really matter as much. It doesn't really affect the markets as much as before. Tesla looks bullish. Expect a little rebound most likely tomorrow, so long as the Fed does not invalidates the news about a potential emergency cut that's coming. The market should try to rebound. So we'll see if that ends up being the case. And then we'll also see what happens with the Middle East situation. I don't think that's as significant now for the markets as the Fed. The Fed is a much bigger factor, but this might cause somewhat of a move. So don't forget about this. I'd recommend just like paying attention to this, and we'll see how things go. With that being said, I want to thank you all so much for listening. I hope you guys have a great day. Please remain calm, cool, and collected through everything. And just know that charts are favoring the upside for tomorrow. Right now, that's looking more favorable. So we'll see how things go. All right. So have a great day, guys. Enjoy your night, your evening, your day, wherever you are around the world. And I'll be back tomorrow before the market opens just to give you guys another update. All right. So have a great day and peace out.